Hey guys, it's Chris Wong here. For this video, I'd like to talk about 4 different funds I use in order to build my US dollar and my TFSA. Now, as a disclaimer, I'm not a financial advisor. I'm just a guy who's interested in building a portfolio. So I, as a Canadian, have interest in getting some US dollars. Just because the US dollar seems to be having high value. A lot of Canadians I've talked to, they say that if you have some US dollars, even as cash, it's worth a lot. So they don't like the idea of converting their actual US cash into Canadian cash. And they always complain about trying to get US cash is expensive. I actually decided to come up with this approach. I'm not saying it's the right approach or the most optimal way to get some US dollars, but in my TFSA, I actually like the funds HYLD.U. It's a Hamilton ETF that covers all the US markets and all the US big companies. And I also have the Canadian version HYLD.TO, but I decided to have both. I also use the funds from Defiance, JEPY, QQQY, and IWMY. So those 3 are based on the indexes, the S&P 500, the NASDAQ 100, and the Russell 2000. I know the Defiance funds because they're traded on the American Stock Exchange. They are taxed 15% withholding as a Canadian for every dividend I get each month. So let's say that if I got a $100 dividend for 1 month, I would lose $15 in withholding tax and I won't get it back. So that's $85 left. So I know it's not the most optimal way, but as I was learning about stocks and learning about different accounts like RRSP, TFSA, non-registered account, I just left it in the US dollars when I actually convert to US. So I didn't see a need to convert back to Canadian. And just through trial and error and through funds, like new funds coming in and deciding if there were funds before it that I didn't like anymore, I actually found that I liked the Defiance funds because of the high dividend yields. And those 3 Defiance funds are based on indexes. So compare that to Yield Max. I'm not saying that Yield Max is bad. I actually have a couple Yield Max stocks too. At least with the Defiance ETFs, I find them safer because they're indexes. In the long run, I know that every time I keep getting those dividends from Defiance or even Yield Max in the TFSA, I lose 15% withholding, but I'm okay with that. But I decided to use those dividends in order to fund HYLD.U, because HYLD.U is listed on the TSX. And because it's listed on the TSX, there's no 15% withholding tax. And the reason why I do it this way is because if I buy HYLD.U originally from Canadian currency, it seems to cost more than just buying HYLD.TO. One thing I've noticed is that HYLD.U, the number seems to be a little bit higher than HYLD.TO. So even though HYLD.U is an USD denomination, let's just say, for example, if it trades at 1330 USD, the HYLD.TO might trade around $13. So it actually costs more to get HYLD.U for the dividends itself. The dividend is 12 cents USD or 12 cents Canadian for the .TO one. So in the long term of months of compounding the dividends and the reinvesting, I found using the Defiance funds to fund HYLD.U is a way to build a US portfolio in the TFSA, and I will have HYLD.U over time, hopefully to a point where the dividends I get seem like it's worth it without getting 15% withholding tax on it. And even though HYLD.U does cost more than HYLD.TO, the dividend percentage yield is still more than 10%. I think sometimes as high as 12%, depending on what the share price is. And it's still really good relative to the amount of money you have to put in for like a high yield ETF. Now, the way I look at HYLD.U versus the Defiance funds is that HYLD.U, the entire dividend, I think it's more sustainable to live off of if I were to withdraw the entire dividend on a regular basis. Like, I'm not saying I'm doing this now, but let's just say in the future, like say 20 years later, do I want to withdraw the entire dividend of HYLD.U? I would feel more comfortable to do it with a 12% dividend yield than the Defiance funds, because the Defiance funds, the dividend yields range between like say 30% and about 80% for the last few distributions, and depending on which fund it is. So those Defiance funds, like, although some people say that you cannot live off the entire dividends, and some people say they don't like the Defiance fund in general because very high yields has a price to drop the entire stock price every time they pay out distributions. In a way, like when distributions get distributed from the Defiance funds, because the dividends are so high, the stock price does drop a lot on ex-dividend date. But on HYLD.U or HYLD.TO, because the distribution is 12 cents. So 12 cents as of say February 24th, 2024, it actually doesn't affect the stock price as much. And because the fluctuations are more than 12 cents on a regular basis on HYLD and HYLD.U. So let's just say my main goal is to have a good amount of JEPY, QQQY, and IWMY, mainly just to improve other funds, especially HYLD.U in my TFSA. Those three Defiance funds, I will use them over time for regular expenses, but it may be only for like rare occasions. So it may be like, maybe in the future, if I want to take a vacation, and a vacation is only like a 1 or 2 time thing a year, then I wouldn't mind withdrawing the entire dividend for that 1 or 2 times a year. But on a regular basis, those dividends are not meant to live off the entire dividend balance, especially like if you have mortgages, rent to pay off, car payments, or any other major expenses on a regular basis. I hope this is good information for you, and I hope you like the video. If you do like the video, please subscribe to my channel, and please give me a thumbs up for this video. Thank you guys for listening.